Good evening, traders. This is Sam the Trader Geek with your Sunday, September 14th, 2025 market review and preview video. Hope you're having a great weekend. And we've got major markets for last Friday, which were kind of a little bit dull, and the weakness under the surface didn't quite reflect itself in the indices. Bitcoin was up about 2%. Mag 7 up about 1.5%. Mostly that was Tesla's strength. Q's up 44 basis points, and the VIX was also up on Friday, 34 basis points, even though things were up. But when you looked at the S&P 500 on Friday, I think there was 30 up and 70 down. So breath was definitely lacking on Friday. Mid caps took a hit to the tune of 1.1%. Small caps down 1%. Micro caps down 85 basis points. And the Dow Jones is down 0.5% with the bonds taking down about 43 basis points. Looking at the week, we saw Bitcoin rebound about 2/3% with Mag 7s up 2.81%, again on the strength mostly of Amazon and a bit of Google. VIX lost almost 3% with the mid caps losing a little bit of ground, and the dollar kind of flat on the week. Looking at the month to date, which is basically 2 weeks old in September, Mag 7 up 6.5%, Bitcoin up 5.5%, and TLT bouncing on a decline in interest rates. Not a causal effect there, but it's basically bonds go up, interest rates go down, and vice versa. Q's trying to catch up with the spies, the SPOOs or spies, whatever you want to call them these days. 3.72%, and gold gaining 3% as it makes new record highs. I can't count the number of people who thought that gold was down and out and it had its high for the year, and here we are making new highs. So never say never. VIX lost about 14% so far this month, with dollar showing its weakness down 0.5% on a quarter to date basis. And we've got about two more full weeks in this market, 2 weeks, and then basically call it a couple of days, with the micro caps leading the way, 14.19, Mag 7 up 13.5, and IWM small caps up 10.5%, with gold also up 10%. GBTC 8.16%. So only thing down was the VIX, and that makes sense with all this green that you see in the right column in these major markets. And the weakest of them, high yield bonds, which is kind of surprising given that the TLT was up pretty well. Well, I guess 1.93% for the quarter. Looking on a year-to-date basis, gold is still the clubhouse leader, and you can see it's up almost 39%, with Bitcoin up 24%, Mag 7 up a little less than 16%, and the Q's up almost 15%. A SPY, a respectable 12%. So much for those who said that SPY would not be up double digits this year. Of course, we have 3.5 months to go, so it's still too soon to call it. VTI, Vanguard Total Market Index up 12%. VIX losing 15% this quarter or this year to date, and the dollar down 7% from the year. And in the worlds of currency, 7% is a big deal. So high yield bonds kind of bringing up the rear in terms of major markets. Taking a look at the sectors, we'll go through these a little bit quicker. You can see the worst of them, XRT retailer stocks down 2% on Friday, and the best was communications, XLC 83 basis points, and consumer discretionary 0.452. So kind of weird that the consumer discretionary was up 0.5%, yet the retailers were down 2%. Go figure. Utilities having a tiny bounce, up 0.5%. Looking at the weekly for the sectors, you can see that Technology leading the way 3%, utilities up 2.5, and communications up 32 basis points. XLB, or I should say XRT, 1.16%, staples down 0.68%, telecommunications 0.31. So kind of mixed bag for the week with more sectors up than down, but not a lot of them up over 2% on the week. Looking at the sectors month to date, again, communications up in the lead with metals and mining still showing their strength up 5% and technology up 4%. At the bottom, energy down 2.2%. Oil just can't seem to get out of its own way with the staples down 41 basis points. Taking a look at the quarter to date, it looks a lot greener with only XLP losing ground on a quarter to date basis, 0.8%, and metals and mining up 27.30. I mean, a far cry. Look at that. The retailer stocks up 12%, and the rest single digits with the consumer discretionary up 9.8%, and communications up 8%. Bringing up the rear, but positive, is real estate and healthcare, which is trying to get a footing, but still very much a laggard on a quarter to date basis. Looking at year to date, look at the metals and mining up 50%. It's just like you can't stop those miners. Communications up 21%, telecommunications up 18.75%, and everything positive on a year-to-date basis, including XLV, but barely up on the year with staples and XLE and real estate bringing up the bottom. So what you're seeing here is a risk-on environment where the most defensive sectors are in the bottom, as you would expect. So yeah, they're all up, but they're up the minimally, and risk-on like consumer or like communications, telecommunications, technology, industrials, utilities are more defensive, but that's a factor of a lot of the nuclear stuff, powering data centers and what have you. Financials in the middle of the road. Taking a look at the Mag 7 for the last week, Apple, after its not so stellar event, down to 2.34%. Amazon losing 1.8%. Really, Amazon is just like stuck in the mud or something. I don't know. It just can't seem to. It starts to get going, and then it's like a tractor beam brings it back in. Meta, pretty much flat, but Tesla, superstar last week, up 12.8%. Nvidia regaining about 6% with Microsoft and Google 2-3%. On a quarterly basis, quarter to date, Google leading the way with Tesla now in second place, and Apple up 14%. Meta and Microsoft kind of still consolidating their gains on a year-to-date basis, with Amazon in third from last place. If we look at year-to-date, you can see that Nvidia still leading, but not by as much as it used to. 29% for Meta, Google way up there, 26%, and Apple still at the bottom, with Tesla climbing out of the basement and still down 2% on the year after the week, even after the week we had last week, with Amazon up 4%. But 4 out of the Mag 7 are up double digits, and not a small double digits, 20% are up. So that's really cool. Anyway, let's take a look. We don't need to get into, you know what? Let's take a look at the industries year to date, just to kind of see where things are. And it's no surprise the GDX is up 105.69%. I mean, that's a double from the year-end value, 33.91 to 69.75. Good for you if you're still holding on to the metals and the miners here. Blockchain stocks up 47%. KWeb, this is the Chinese web stocks up 39%. And these are major industries, and they're not necessarily industries, kind of areas of the market. ITA, this is defense stocks, not defensive stocks, with TAN being solar stocks up 26%. Um, Chips are up about 25.66. That's respectable. PEJ being the um, uh, what is the PEJ? The entertainment stocks. Geez, I wanted to think of PBJ, which is food and beverage, and then at the bottom, XOP, exploration and production, down at the bottom. But look at software stocks, only up 2.67%. Not doing great so far this year with XBI, the biotech's trying to catch some traction. Okay, enough of the history there. Again, I show all of these to kind of show you where the strength is. And when you're buying stocks or options where the performance in the quarterly basis and the monthly basis and on a year-to-date basis is strong, strength tends to be beget strength, beget. In any case, you want to fish where the strength is, and you don't want to follow the weakness. So, energy is not where it's at. Healthcare is not necessarily where it's at. It's in tech, it's in communications, it's in um, the some of this is discretionary, but um, you know, pause the video, look at some of these sectors, these industries, and see where the strength is. And if you're buying a stock that's in a weak sector or a weak industry, think about it again because the wind is not at your back when you're doing that. Okay, enough about that. Taking a look at my tripane of indices. We've got the daily chart here, weekly chart here, and the monthly chart here. And I like to start out with this, with the SPX. And you can see here that this green mark here and this red mark, this is the bottom edge of the options implied expected move. The red line is the uh, upper edge of the options implied expected move. And you can see that we closed about 20 points above the options implied expected move last week. And that was basically kissing the 6,600 level and then coming in later in the afternoon. So what we did in the process last week is had a kind of a range breakout target at about 65.65, and we blew past that and went up to 6,600. We closed at 65.84. And you can see already here I have next week's options implied expected move here at about 64.75. That's the lower edge of it. As you'll see in a minute, we have about I think a 90-point move expected for next week. And then you can see already up here 66.75 as the implied move for 66.78 to be exact is the upper edge of the implied move for this week. And as you know, we have an important meeting coming up on Wednesday with the FOMC. You can see here that we have a reversal play target still in play at 67.37. So that's a target, but whether this week ends up being a consolidation week or a further gains, it remains to be seen. But this is a triple witching options expiration where index options, stock options, futures, and stock options. So it's stock and index options, futures, and futures options all expire this week. That's the triple witching. And so we've got that combined with the FOMC meeting, and you have a recipe for volatility. And I would argue there's not much that the FOMC is going to do other than lower interest rates by a quarter basis point. Obviously, it's going to come down to what they say, but with the weakening in the job market, what are they going to say? They're going to continue to reduce interest rates. I am not in the 50 basis point reduction camp. I don't think they will, but I don't have a crystal ball and I don't have a red hotline to the FOMC office. In any case, MACD on a daily is positive. And we are getting to the overbought. We're at the 67 level on the RSI. So that looks good. Um, and again, we were outside the expected move by about 20 points. And here you can see that the weekly chart just looks beautiful. We just went sideways for about 3 weeks, tried to break out the prior week, but last week we did it. So nice candle on the weekly, and yeah, it could very well continue this week. But we have to get past some volatility events. There's an options applied expected move, and 64.90 33 is the lower edge of the expected move for this week. And I'm going to show you something interesting with respect to this in a moment when we get to the SPX implied move. Looking at the monthly chart, I mean, what a beauty after this dipsy doodle in April. 1, 2, 3, 4, 5 months going up. We're not done with September, but who knows? But taking a look at things on a weekly basis, I mean, there's nothing here that says we're a reversal is inevitable. Any inevitable, nothing that says that this is bearish. But look at the MACD, solidly positive, getting back to the overbought area. And then if you look on a monthly, the RSI has been overbought and staying overbought, and that's a sign of a strong market. So what can you say? And if you look back to October 2022, all the way up here, it's been with a couple of with this little dipsy doodle, it's been a smooth ride. We had a little 3 month pullback there back in 2023, but it's just been up and up ever since. And yeah, there are targets up to 67.37 and all the way up to 69.58 to get us to a lot of the targets. And if you want to look even further, you can see there's a target up there at 74.59. So let's not get ahead of ourselves. I think we have some consolidation in our future, and we'll see if that happens this week. So what did I do to that chart? There we go. That's better. All right, so let's take a look at the NDX. And you can see here, similar kind of thing. We were just outside the expected move. We broke the 24,000 level on the NDX. MACD flipped back to the positive side, still not overbought on a daily. And again, you're seeing the options implied expected move for next week, all the way up here at what do we got? 24,504 and 23x680 is the options implied expected move on the downside for next week. Can't say there's anything wrong with this chart. MACD is solidly positive, almost to the overbought 70 level on the RSI, overbought on the monthly. MACD positive. I mean, just look at this chart. It's just nothing bearish about it. And you can call a top all you want, but nobody really knows where that is. And whether 6,600 in the SPX or 24,000 in NDX is at the top, I'll leave that game for someone else because we don't know where the top is. Nobody does. All right, so Russell 2000 small caps. There's last week's. We kind of had a little flagging action on Thursday, really strong day, and then a kind of an inside day on Friday. So this kind of sets up for a trade, basically. We go up above Friday's high, might be a short-term trade. We go below Friday's low, that might be a short, but that's not my game. This is a younger man's game to play, and it's not what I do, but that's what a lot of people do with an inside day. Kind of got a doji on this on the weekly. MACD solidly positive. Looks over here on the daily. Sorry for flipping around on you. Trying to flip back to the negative side, but we stayed inside the options implied expected move on the Russell last week. And here you can see the options implied expected move, and you can take these down, but I get these out of Thinkorswim, and anybody can get them on a weekly basis. Looking here on the monthly, looking pretty solid and looking a lot better than it used to. MACD has flipped positive, and we are not overbought on a monthly basis on the Russell 2000. So we have broad-based rallies, broad-based support here, and wouldn't surprise me if this week we're bullish. And now taking a look at this week, and before I do, let me just go over to the VIX, and I don't really need to look at three time frames. I just need to look at the daily. So you can see we have a lot of fits and starts here, but we are under the 15 level, and from my experience, this is I wouldn't call this the most tame 15 level in the VIX that I've seen. I would call it, an unusual 15 level because we've seen some days where we come in 40, 50 points in a matter of a half hour and then take it all back. And you don't usually see that with a 15 VIX, but here we are under 15, nothing bearish here to say. If we take a look at the VVIX, which is the volatility of the volatility, and as I like to talk about, you know, uh, it tried on Friday to get to the 100 level, didn't even quite make it here. So volatility to volatility is neutral. When you get over 100, then I start looking at it, and over 110, that's when we get into a zone where there's lots of institutional hedging going on. But this is not telling me anything. It's under 100, so it's kind of neutral. In any case, let's take a look at the options implied expected move. I'm going to maximize this. And well, I guess we're on the VIX, so why might as well take care of that. And you guys know what I'm going to do. We're taking a look at the closing VIX, which is 1476, and we'll call it 15. And so if you are bearish on the market, you're going to want to go out and buy calls on the VIX, or maybe puts on the SPY. But let's assume you want to buy calls on the VIX. And note that we have an options expiration on the VIX on Tuesday. So these VIX options stop trading on Tuesday evening at the close, but they settle on Wednesday morning. So you can't trade them after Tuesday night. So they only have 2 days. So there's no value here in looking at them. So we want to go out 1 month. Weeklies tend to be a little bit less liquid when it comes to the VIX, but they are tradable. Let's take a look at the next monthly expiration, which is 37 days out, and this corresponds with the October VIX futures. And if we're at 15, we want to go $1 out of the money, call it 16. And actually, these are a little bit wide, but let's call it $3 for the calls. If you're bearish on the market, you're buying the VIX calls. But if you're bullish on the market, then you want to hedge your downside in the VIX, in which case you'd buy a 14 call, which is $1 out of the money, and those are going for about 10 cents. So options activity alone as one data point are telling you that there is hedging going on, and at some point or other, and I can't tell you when, and I'm not sure how you can play this, but this tells me that they are buying protection because the calls are much pricier than the puts. And if we look at the November, that's going out 65 days. And I wouldn't go out 65 days if I were buying protection, but just for the sake of argument, these are trading at, let's call them $3.95, and these are still trading for 18 cents. So more than 20 times. So they're telling me that this is advantage bears in terms of somebody's expecting some volatility, somebody's buying protection, and the VIX is telling you as much. As I said, this is a triple witching expiration, which, as I understand it, is one of the biggest options expiration we've had in history. At least that's what I've heard. Lots of options coming off the board, and you can see on Friday there's an AM settlement, and those are the 1/3 of the triple witching expiration. And then there's a daily settlement, which are these. And we have about a 94 um, uh, point expected move between now and Friday. And mind you, this includes an FOMC meeting and a lots of volatility. But taking a look here, uh, if we're looking at the SPX, I'm going to go back to the AM. You don't see a lot of open interest here, but I want to open up more strikes. Let me do about 100 of them, see if that's good enough. But I want to show you what's happening here, and that is with the open interest, you got 20,000 here on the call side on the SPX at the 6550 strike. But look at what you've got at the 6500 strike. You got 56,000 there, 47,000, 48,000, call it on the put side. Um, could we get a pullback from 65.84 down to 6,500 to kind of, put it bluntly, screw these people that have these options long? Certainly can, and it could be a possible pullback. And as we saw with a 93, well, at least for the options that expire on the morning, there's a 90-point move expected. Certainly within the realm of possibility that we get down, we see some volatility. But when you look at seasonality for triple witching in September. And if you go back to 2021, the history isn't great. Basically, 35% of those years have had a positive week in triple witching. And the Friday, if you go back for the last 14 years, only not two of the last 14 triple witching, which includes March, June, September, and December. Only 2 out of the last 14 of those quarterly expirations have been up on a Friday of expiration. So take that for what it's worth. Again, this market has not been following the seasonality script. But you could make a strong case that if you believe in the pinning theories of the market, and to a certain extent, I do. This would be a good point to pull back to into Friday to kind of screw everybody who owns these options and get the market makers whole here. But you can see a lot of open interest. Let's go further in. Look at all the way out here at 6,400. You got 36,000. Here you have 37,000. Going to 6,350, 23,000. And same on the call side at these. You see the most open interest at the 50-point marks because that's what opens up first. And then eventually they fill in the strikes, and 38,000 here. So, and you can see out here, out of the money, 23,000 here, 22,000 there, 17 here. And a lot of these strikes have been opened up ever since the market's been on the up and up. So, kind of a mixed message here, but the options expiration week for the last few years, since 2021, this September options expiration, 35% of chance of the week being up. When you go back to '09, the start of this long bull market, then it becomes a coin toss when you look at all the options expirations in September, about a 53% win rate. But the average loss has been about 36 basis points for triple witching in September. So the bias is to the downside for options expiration in September. So take that for what it's worth. Again, this market has not been following the script, but if you go back and look at things from on a big picture basis, and we go back to our original charts, then this is a bullish chart. No reason why we can't get consolidation, and we get what we've been getting is two up weeks and then consolidation and two up weeks and consolidation. I mean, you can see this here. Look, 2 weeks up, 2 weeks sideways, and then a couple more weeks sideways, and then 2 weeks up again. Do this again. 2 weeks up, sideways. 2 weeks up, sideways. Isn't that funny how this pattern just keeps repeating? In any case, bulls have the advantage. If you're betting, you better bet in the direction of the market or neutral, and just keep an eye on your profits. I think we've got a 1% down day coming, and that seasonally could happen after Friday's expiration or on Friday. Who knows when that will be? But I foresee, or I would think that we would see some weakness into the last trading week of September. But again, that's all crystal ball stuff, and take it for what it's worth. I hope you found this useful. Oh, before we go, let's take a look at what we have for earnings this week. And obviously, we're getting to the tail end of the quarter. Nothing on Monday to mention unless you're betting on Dave and Buster's. On Wednesday before the market, we have the Lucky Charms, General Mills, and a good old Cracker Barrel. Guy by the Barrel is back. And then on Thursday, Darden Restaurants, for those who like their breadsticks and unlimited salad bowls. And then after the close, FedEx used to be kind of a barometer for the market. Not sure that it still is. Lennar Home Builders. And so those are kind of the most significant earnings. And then here are the economic events that we have for next week. Monday, just have New York Empire State. Not really a Red Star event, but Tuesday we have retail sales and export prices, industrial production, and housing market index. Wednesday, probably heard of this interest rate decision coming up, FOMC meeting. And of course, we get to watch Mr. Powell yap for about a half hour, 45 minutes. And then Thursday, we have jobless claims, Philadelphia Fed on Thursday. So, and I don't think we have anything on Friday that's mentionable. So there you have it, the economic events, the earnings. I think we'll see a week full of volatility. Be careful when you're buying stuff this week. Just know that if option pinning is a thing, that if you're buying something, that things could pull back to areas of high open interest, and it's better to buy if you're buying for a swing trade or a longer term trade. It's better to buy towards the end of the week rather than the early part of the week, so you can see whether pinning is actually happened with the stock or the underlying you're considering. Take care. Thanks for watching. And if you have any feedback for me, at Trader Geek on Twitter, and at The Money Geek as well. So take care, and thanks for watching. Bye-bye.